Warren Buffett just bought over $1 billion into one stock. For those that follow Buffett, you all know that he hasn't put this much money into any stock in over a year and a half. Alongside this, he bought 10 more stocks this most recent quarter. I've spent a lot of time studying these stocks, so let me show you them plus his huge investment. I also managed to find some of the core things that Buffett looks for in stocks, and I'll disclose them later in the video. Starting from the smallest, and that is Domino's. Domino's is a through-on-through value play. It represents all of the traditional marks of a Warren Buffett type investment: understandable business model, low debt, consistent in both profit and revenue, selling below fair value. The second smallest buy this most recent quarter is Lennar. Not sure if you've heard of this, but they're a home constructions company in the US. Forecaster shows us that the stock retails for just a 10 PE ratio right now, and they pay 1.5% in dividends. Buffett here acquired 28,000 shares in Lennar at a price of $127 a share. That's worth about $3.5 million. It's really just a feeler position. So stock 3 is Heiko and stock 4 is Nucor. As you can see, Buffett accumulated 130,000 shares in Heiko, that's worth $43 million, and 850,000 shares in Nucor, worth $124 million. You got Heiko, which is an aerospace and electronics company, and Nucor, which is the largest steel producer in the United States. Some analysts are saying that Nucor is actually a form of a bet on artificial intelligence because AI infrastructure needs raw materials to build it, and steel is an integral raw material for building this. Well, although Nucor will play its part in AI infrastructure, I don't think that Nucor is a strong AI play by any means. Basically, it's one of those companies that as America grows, it grows too. So essentially, as we go along, each stock becomes more important because it is a bigger buy on behalf of Warren Buffett, finishing with his huge bet on this very unique stock. Stock 5 and 6, we have Allegion and Lamar Advertising. 780,000 shares bought into Allegion, worth $134 million, and 1.1 million shares bought into Lamar, worth $139.7 million. So as we go through these stocks, you might be thinking, what type of things does Buffett look for in a stock? What makes a stock stand out before he buys them? I'm going to let Buffett answer that.
You have to think about what makes a good business, and really that's all there is to investing. A good business is the one that earns a high rate of return on tangible assets. The very best businesses are the ones that earn a high rate of return on tangible assets and grow. And then, of course, if you don't pay too much, they can be a good investment. They're a good business to start with by the high returns. If you pay too much for them, you can turn a good business into a bad investment.
So a good return on tangible assets and not overpaying for business. These are key when looking at stocks. Both Allegion and Lamar Advertising have a reasonable return on tangible assets. This is Allegion's number here, 22%, and Lamar is sitting at 12.3%. So both are sitting at least in the double digits, which is pretty good. And then we want to make sure that we are not overpaying, as Buffett says. So there's a couple of ways that you can measure this. One is through the simple use of a PE ratio. Forecaster shows us that Allegion's PE is not bad at 23.7, and Lamar's is around the average at 29.6. So at least with this metric, it looks like you're not overpaying here. You can also get into more detailed ways of calculating value and seeing if you're paying an appropriate price, like you can use the discounted cash flow model, the Peter Lynch model, the economic value added model, or you can just compare EV to sales. And yeah, all of these are available on Forecaster for those who have joined up. What you do is you simply do the calculation of the value and you compare it to the price, and you make sure that the price is lower than the value. Stock 7 is Constellation Brands and stock 8 is Pool Corp. These buys were worth $210 million and $608 million respectively. And Constellation Brands is a stock that has fell off a cliff since March 2024. It was $270 a share and now it is $150. Investors are hugely concerned with this stock because of some of these reasons. Ongoing tariffs on Mexican goods have raised the cost of importing beer, particularly affecting their Modelo brand. Constellation has sold several of their best-selling California wine brands, and not to mention 3 out of the last 5 financial years have reported negative profits. It's a stock that the regular investor would be staying far away from, but it's a typical Buffett play as he likes to be greedy when others are fearful, but not just in a brainless way. He must still believe in the business model of the stock. Constellation, people forget, is still the largest beer importer in the US. It owns brands such as Corona, Corona, Modelo, Pacifico, Victoria. And yes, although they have divested from some of their lower cost wine brands, they still have a range of premium brands including Robert Mondavi Winery, the Prisoner Wine Company, Kim Crawford, Casa Noble Tequila, and High West Whiskey. And also they're expanding into non-alcoholic beverages too. One of Warren Buffett's best investments in history has been Coca-Cola, a product that you know will never go away. And I think Buffett sees similarities with Constellation. You look at their dividends, they've raised them for 10 consecutive years, currently offering a 2.5% dividend yield. And if they can go back to hitting some of their net income years that they had before all of this drama occurred, they can make $2 or $3 billion a year. That's what they made in a lot of the prior years. So you compare that to a market cap of 27 billion, that could give it a PE of 9 to 13 going forward. So you can see why Buffett likes the stock, understandable business, lots of panic, low price, etc. Stock 9 was Chevron, and stock 10, Buffett's second largest buy, was Lena. As you can see, Buffett's company bought 3.4 million shares into Chevron, which is priced at $160, so that's a $540 million investment. And Lena, he bought 5.1 million shares in. It's priced at $130 a share, so it's a $660 million investment. And starting with Chevron, it is a very volatile investment, probably a trader's dream. The past year, it's ranging in between $160 a share and $130. And with regards to their dividend, it has been very consistent. They've increased it since 2009, and right now they pay $1.70 per share, so that's a yield of 4.2%. In this market, not bad at all. But with Chevron and oil stocks in general, there's a big debate going on. On one side, people think that oil is going away in the modern world and is a stupid investment. And the other side thinks oil will be used for a long time still and is cheap right now. So I want to show you what Warren Buffett says on this.
Essentially, when you buy into an oil production company, how it works out is going to depend on the price of oil to a great extent. When you buy oil, you're betting on oil prices over time and over a long time. People that are on the extremes of both sides are a little nuts. I would hate to have all hydrocarbons banned in 3 years. It wouldn't work. I think Chevron's benefited society in all kinds of ways, and I think it continues to do so, and I think we're going to need a lot of hydrocarbons for a long time, and we'll be very glad we've got them. I have no compunction about owning in the least.
I like having big reserves of oil. I would just leave most of the oil we have here, and I'd pay whatever the Arabs charge for their oil, and I'd pay it cheerfully and conserve my own. I think it's going to be very precious stuff over the next 200 years. And nobody else has my view, so it doesn't bother me. I just think they're all wrong.
It wasn't that long ago that the idea that anybody produced a barrel of oil was somehow something terrible. I mean, just try doing without 11 million barrels a day and see what happens tomorrow. Most people feel that it's nice to have some oil in this country than not have it. We're using a lot of it, and if we were to try and change over in 3 years or 5 years, nobody knows what would happen, but the odds that it would work well are extremely low, it seems to me.
I can hardly think of a more useful industry. I don't have this feeling that it's an evil, crazy place. I wish the rest of the world worked as well as our big oil companies.
So that's about as crystal clear as you can get with these two. They do not think that in the slightest oil is going away in the short, medium, and probably long term too. This is one reason why they both like Occidental and Chevron. So let's quickly take a look at the fundamentals of Chevron. Their PE ratio is sitting at 20.9 right now, so that's below market average. Their return on tangible equity is okay. During the past 13 years, Chevron's highest return on tangible equity was 24.8%, the lowest was minus 8.5%, and the median was 8.28%. So it's not bad of a business. I would give it a pass mark. Obviously, it's going to have its fair share of volatility because their profit will always be tied to the price of oil, which is why they suffered so much in the pandemic years. But overall, they are selling a product which I think will be in need for a long period of time. And they have a good moat because they own significant assets in the Permian Basin, and it's not easy for others to just come in and compete against this oil giant. Buffett knows this very well. So he's gone pretty big into oil right now, and this comes with recent news that he's dumped his shares in the one clean energy stock that he did own. I'm of course talking about BYD. BYD is basically China's version of Tesla, and essentially they produce some pretty decent electric vehicles. Warren Buffett bought BYD stock way back in 2008 based on the advice that Charlie Munger gave him.
Charlie deserves 100% of the credit for BYD, so I'm going to let him answer that.
Well, it's an interesting example because Berkshire would not have made an investment in BYD if the opportunity had come along 5 or 10 years earlier. And it shows that the old men are continuing to learn, and that's absolutely essential. Again, Dave Sokol helped. I wasn't at all sure I could get Warren to do this all by myself, so I inveigled Dave into going over to China, and the two of us were able to help the learning process.
So we do need to ask why Buffett would sell BYD now if it's such a great company and actually performing so well. Just look at all of the profit they're making and all the growth that's happened. Well, this clip might give you a bit of a clue.
If you look at BYD, which most people have never heard of, if you count all the manufacturing space they have in China to make cars, it would amount to a big percentage of all the land in Manhattan Island. And nobody ever heard of them a few years ago. Well, BYD is selling about 50 times earnings. That is a very high price. On the other hand, they're likely to increase their auto sales by another 50% this year. You could understand why some people would sell Berkshire's BYD stock at 50 times earnings. At the current price of BYD stock, little BYD is worth more than the entire Mercedes Corporation market capitalization. So it's not a cheap stock. On the other hand, it's a very remarkable company.
So that gives you a bit of an idea on what's happening with BYD. Before we go over Warren Buffett's main investments, I want to show you a little trick from Forecaster to help with investing. If you click on the news segment and scroll down, you can use Forecaster's AI agent to get a news recap to see exactly what's going on with the stock. And this can be quite an important part of research because you don't want to miss a segment of news that could dramatically affect your stock. For example, if there was a major oil spill with Chevron, like what happened with BP in 2010, you might want to think twice before buying. But with Chevron, there's nothing like this going on. The news is mainly positive, so they secured a 10-year LNG supply deal with China, which could boost Chevron's clean energy reach. Obviously, as we already know, Warren Buffett recently increased his stake in Chevron, and Chevron's CEO disclosed his perspective on the energy transition, emphasizing the continued importance of fossil fuels. And if you want to get access to this, click the link in the description for 10% off Forecaster. You'll also get full access to their newly released projections tool, which you can use to help project stock movements. But now it is time to look at the stock that Warren Buffett has been buying the most of this quarter. In the second quarter of 2025, Berkshire Hathaway, led by Warren Buffett, acquired approximately 5 million shares of UnitedHealth Group, valued around $1.6 billion. Buffett is famous for spotting value in quality companies facing short-term trouble. I didn't expect him to do this, I gotta be honest, but UnitedHealth looks like a classic Buffett move. This insurance company has faced a lot of setbacks recently, a 50% decline in stock price in 2025 due to an array of pressures. These pressures include rising medical costs, federal investigations, management turmoil, the tragic killing of its CEO Brian Thompson. But despite its recent setbacks, it still remains a fundamental play in healthcare. They offer a notable dividend yield, and they sell for a PE ratio of 13, one of its lowest levels in over a decade. I guess we shouldn't be surprised that Buffett would take a stake in this company that he already knows well because he used to own it way back in 2006, and now that it's become cheap again, he has reignited that position. Thank you to Forecaster for sponsoring this video. Don't forget to check the link in the description or pinned comment to get 10% off, and you'll get access to all of the great features for analyzing stocks.